Ahoy there, trader, and welcome back. We've got a little bit different today for you. We've got our very first guest, one Mr. Dan Passarelli. His name is well known throughout the trading community. He's a very well known, very respected trader. And if you are not familiar with him, here's just a little introduction. He is the founder and chief executive of MarketTaker Mentoring. Again, if you need the links, they're in the show description. And he's a leading option trading educator and education firm that provides online trading newsletters and personalized one-on-one coaching for option traders. He has trained over 100,000 traders in 50 different countries, or more than 50 different countries, and many have seen great results, great success to become full-time professional traders. So without further ado, let's dive right in. And let's listen to the interview, or my interview, with Dan. Ahoy there, traders, and welcome back. Today we have something a little different and a lot special. We have our very first guest on this show, the very well-known and exceptional trader, Dan Passarelli. Dan, welcome aboard.
Hey, it is so great to be here, Phil. Thanks for having me.
It's an absolute pleasure. I've really got one burning question to ask you. It's been on my mind all week since we finalized some dates and times. And being an experienced trader, you and I, we both appreciate that there's no single thing that works in the markets. And I'm personally a fan of everything works some of the time and nothing works all of the time, as I'm sure you can appreciate. But there is always a process behind what works consistently. So perhaps with a focus on short-term trading, which is kind of like my area of interest more than anything, anywhere from day to short-term swing trading. Do you think you could share your thoughts on either a thought process or a system process that may help fill in the blank spots for anyone that is struggling to make this work? Because really, we both know it's not one indicator or tool that's going to make it work. It's a thought process or a thinking process that really smooths out the path to being long-term successful and not just short-term lucky.
Yeah. Oh, man. You asked really the only question that matters, didn't you?
I told you, I've been thinking about this all week.
Holy cow. Yeah. So that is the
question, isn't it?
Yeah. So this is something I kind of have to give you at least the medium length story here, I think, to do it right.
Oh, yeah.
But I started my career on the floor, on the trading floor, in the pits, and I learned how to trade by shadowing the guy that I worked for, Gino, for a couple of years, and really kind of got the ropes. And when I started trading as a market maker, I traded for, I don't know, almost a decade, doing that. And things just became very, very automatic, So a broker would walk in the pit, say, hey, what's the market in this? 50 bid at 60, I'll buy them, sold, done, trade's over. The entire thought process happened within a couple of seconds, just because I've done it.
Just taking the other side of it as a market maker, aren't you? Whatever it is, you just, yeah, I'll take it.
Yeah, right. And, I don't know, it just seemed like the whole thought happened within a fraction of a second. And then when I started teaching for the Chicago Board Options Exchange, somebody asked me that same question. What are the steps? And I was like, I don't know, you just go trade. But then I had enough people ask me, and I was like, well, there's something there. And the tricky part of it is, if I'm trading a call credit spread, there are certain things that I have to look at, including resistance and the implied volatility level. But if I'm trading a time spread, there's something else I have to look at. Is there support and resistance, and what is the term structure of volatility, of the two different options? And if I'm trading a straddle, I got to look at something different. So I was like, how am I supposed to come up with a system of trading when there's so many different things you can trade? And so I decided to sort of take a general approach, and it's what I call the MarketTaker trading path. And it's basically just observe the market, do your technical analysis, fundamental analysis, volatility analysis. You need all three of those for option trading anyway. And then with those, you can develop a complete holistic forecast that includes, not just up or down, but degree of up or down, the timing of that move, what happens to volatility if that move occurs. And then selecting the ideal position. I know there's a lot of people who focus on one type of trade, like, okay, all I do is broken wing butterflies and I get really good at it,
That's what I did for many years. I spent 12 years just doing one thing very successfully. But then as you step into the world of options, there's 1,000 different ways to express one trade idea.
Mm-hmm.
Well, obviously I'm exaggerating, but we're close.
Yeah.
So a guiding process starts with, just to kind of backtrack slightly, fundamental, technical, meaning the charts, and then the volatility, because we're in the world of options, then that's also an element of consideration. So that would be, perhaps to kind of put an analogy to it, that would be the high level roadmap that would guide your decision making. And then depending on how you're going to express a trade, it depends on the time horizon, whether it's a few days, a few weeks, a few months, then there would be a different route to follow to get to the destination of placing the trade. But you've got kind of way stations along the way that are always the same.
Yeah, that's a great way to distill it. Yeah. Basically what you're doing is you're taking the analysis, I just call it the trifecta of analysis: technical, fundamental, and volatility. Analysis to specific forecast, which enables you to select the optimal way to trade that scenario.
This is a little, can I just take a little detour with you? A little bugbear of mine is that the technical analysis side doesn't necessarily matter a great deal as long as there is something that gives you an edge. Would you kind of agree or disagree with that? I mean, for example, everyone has got different knowledge and experience. Like my personal experience, I spent a lot of time looking at geometric shapes, essentially. I was a breakout trader for 12 years. I could layer that onto the TA part of your roadmap, or the technical analysis part of your roadmap, because that's what I'm most familiar with, I'm comfortable with, I've made success with. So if I was moving from, say, just stock or futures into the options world to use your process, I could bring that to this process because it's something that I'm already familiar with. So does the charting element matter greatly, as long as there's an edge with it?
Oh man, I would vehemently argue yes and no.
The age-old "it depends."
Yeah.
On the assumption that there's an edge with what you're doing, I think we have to put that provision. We're not doing a coin toss type of analysis,
right? And here's the thing. Everybody has the things that they're good at and not good at. You take any person that that you think is really super smart, and you talk to them long enough, and there's going to be something that they just completely don't understand. Maybe that's...
I always like to say that I'm just a poor farm boy who figured out what buttons to press and accidentally figured out the right order.
Yeah.
There's a lot of things that I'm not an expert in. I would 100% agree with that.
Yeah, and the other way around too. You maybe somebody who you think is maybe not the sharpest knife in the drawer, but that person may know this one thing really, really well, and so because nobody can really know everything, I find very few people who can really just tear apart financial statements and are super great at macro analysis, fundamental analysis, but are also good at technical analysis.
It's one or the other. Again, I made that decision a long time ago when I was reading for about the thousandth time one of those 1,200-page tomes of a book. It was evenly split into technical and fundamental analysis. I just thought sitting through fundamental reports and bank statements, account statements, balance sheet, that the thought of that was going to dry my eyes very quickly. And then I realized I had exactly the same issue for looking at the charts. There's so many tools and indicators. You've got to pick one thing just to start somewhere, just to get the ball rolling.
Yeah, and I'm a huge fan of that, whether we're talking indicators or trading strategies. Get good at that one thing. Like you said, like you got really good at one thing, you traded for 12 years successfully. Great. And it worked for 12 years. You probably made a lot of money doing it.
It still works now. I mean, I do a lot of other things, but it was just one thing, just doing the same thing day in, day out. I think that's also perhaps an error that you probably see as well as a mentor. So many students will jump around from chart to chart, indicator to indicator, tool to tool, without really dedicating the time to get even competence at one of the things, because they're trying to do everything all at once.
Yeah. Oh man, I could tell you stories for sure. Somebody who's on just a million people's email lists, and they're just getting, what do they say, drinking from a fire hose,
Focus on one thing. So it's a cliche, and as I like to add, it's a cliche for a reason. It's focus on one thing to see success. So I think we've kind of nailed down we've chased the rabbit of charting. I think it's fair to say pick one thing. Would be fair to say. It doesn't matter what the thing is, as long as it comes with an edge. We've all got our own personal preferences, and that's part of what makes the personality or the style or the flavor of a trader. Is there something, because I'm completely unknowledgeable on the fundamental side, what do you consider to be the fundamental? Is it the balance sheets, or is it more of a higher level? Is it the economic reports? Is it an awareness of them? Do I have to read the reports? Where do you lay on the fundamental side?
Yeah, as an option trader, I take a very, very simple, streamlined approach to it. And I've been, over the past maybe decade, I've been slowly trying to get better at fundamentals, because that's something I was never very good at. But as an option trader, the one thing we always need to know is, like, when are the volatility events? Because, I can put on things like iron condors or time spreads, where as long as the market doesn't move a lot, I make money. Mm-hmm. But if I'm completely unaware of, when the next earnings announcement is, when a hugely important unemployment report is coming out, like if I'm putting on some of these neutral strategies right before an event occurs that is likely to make the stock go crazy, I'm not going to make money. So like that's my initial point of my quote unquote fundamental analysis, is just knowing when the volatility events are, reading enough news to know, is there something in the pipeline for this stock that could cause it to move a lot in a single day.
Excellent. So it's more of a known event, as opposed to trying to forecast what the next undetermined thing behind the fundamentals. Are they going to report good or bad? You're not trying to get into the detail of it. You just got an awareness of, hey, every 3 months there's earnings. Every month, first Friday of every month, there's non-farm, like today's non-farm payroll. You've got just an awareness of when these events, and that would influence either the way that you place the trade, or maybe either delay the trade, or maybe accelerate the trade decision, because you've got this trade awareness, this fundamental awareness of a potential market moving event. So we're not worrying about what the actual number is, for example. We're just aware that, hey, today's the day. Maybe I just delay my trade decision.
Yeah, because you know what, like we don't really think about it all the time, because nowadays when we trade, we're sitting in our home office and there's nobody else in the room. But we are competing against thousands, hundreds of thousands, millions of other traders, and some of them are these analysts at Goldman Sachs and Morgan Stanley, and they have this stuff figured out way better than I'm ever going to. So I can't compete on being able to guess what the number should be exactly better than these guys.
And I think I'm on your side of the fence here. I like to be willfully ignorant on a lot of things, and so just having some awareness of, maybe I don't step in front of the bus today on non-farm payrolls. There's plenty of other days in the month to trade index futures. Today's not the day to worry about it.
Yeah, exactly. And like, just to back up too, we were talking about technical analysis. Like, I feel like that's the same thing. Like, technical analysis basically is just it's a roadmap of the human behavior of the big money that made those fundamental decisions in the past.
It's almost like you're stealing kind of like my little phrase book here. I like the way I like to phrase that. It's a visual representation of human psychology, of crowd psychology, rather.
I love it, man. I love it. Yeah. Well, I didn't tell you, I snuck into your house and read your trading diary. So
I wondered who was at the window the other day. No, but I think when you've been doing it so long as you have, you start to formulate similar viewpoints and similar opinions. I mean, like this route metaphor that we started with, we've got the kind of the three waypoints. We can kind of meander the details of how we go through the fundamental, the technical, the volatility. We can go slightly different courses, but generally the same routes. We're going to get to the same destination. And I think for anyone who's kind of figured it out and has got something that's working for them, will have that similar philosophy or viewpoint, no matter whether we agree on the detail of, like, I like technical analysis, you like fundamental. It doesn't really matter. We're both making money. Who cares about the detail? We've both got the same overall philosophy of what works and what doesn't.
Yeah. And that's what it comes down to. It's like, it doesn't matter what the exact perspective is do you arrive at it's do you make money? Like, it's not.
Yeah, bottom line. Are we making or losing money? If yes, do more of that.
Exactly. Like, that's one thing I say all the time. It's like, trading is really not about being right. It's just about extracting money from the market.
About being right on average.
Yeah, that's right.
like every other business in the world, you don't expect every customer to come in and buy one of every product in every color. You just expect enough customers to come in on average and not ask for refunds or steal anything. So volatility. How do you view the volatility elements of your thinking process?
Well, when it comes to options, volatility is extremely important and really underrated, I think, by a lot of people who are just getting into options. Because there's two different volatilities. There's historical volatility, which is what we all tend to think of initially when we hear the word volatility. It's how much does the stock whip around,
Yeah.
And then implied volatility is this more really esoteric figure that a lot of traders really everybody needs to wrap their head around when they're first learning it. It's basically how cheap or expensive the option is based on purely the supply and demand factor, like stripping out the directional component, the time component, and the interest rate component. Other than that, are these options cheap or expensive? And that's really where you get an edge as an option trader.
And how might you do? I appreciate there's a lot of different ways depending on the strategy, but let's just perhaps keep it simple. Let's say a credit spread, for example, that you mentioned earlier. What would be a way to assess whether a credit spread is cheap or expensive for a trade that you might be considering?
Yeah, so with every trade that I look at the volatility chart. Specifically, I plot the 21-day historical volatility versus the 30-day implied volatility. And I look at three things. One, I look at where the implied volatility is relative to itself over the past 6 months, because that tells me, have the options gotten more expensive or more cheap? I also look at the today's implied versus today's historical, because that gives me an idea of, are these options just purely overpriced or underpriced? And the third thing I combine that with is just a little bit of looking down the road at, what are these numbers that might come out, what is likely to happen to both implied and historical volatility going forward. And that's the trickier one, because nobody can predict the future, but we just apply a little bit of logic about known events and you can make some pretty good headway there.
Interesting. So I'm just randomly thinking now, we're obviously speaking quite high level here, but I'm just trying to be respectful of your time. Obviously, this is usually quite a shortened podcast, but what would be a tactic or strategy or a tip or just some piece of advice that perhaps you keep to yourself because no one's going to believe you?
Well, if I had such a thing, I wouldn't share it, would I?
I'm a fan of simplicity, so most people want to overcomplicate this, don't they? So that's usually what I tell people. Just keep it simple. If you're making money, it's working. Don't overthink it too much.
Yeah, and I think one thing, and this is really one of the tenets that I teach our student traders, is you're going to select a strategy that maybe has a directional component to it, or maybe it's a neutral component or whatever. But when you give yourself like an extra oomph, like you search for edge above and beyond the obvious things to look for, like if we're trading a breakout trade, we're going to look at the moving average crossovers or whatever it is we look at. But even though the trade isn't purely like a volatility trade, I'm still going to use volatility to guide which specific strategy I'm going to trade that with. Should I be buying options because they're cheap, or should I be selling them because they're expensive? I mean, I can take a bullish position.
And that would go back to the volatility assessment you mentioned. So, for example, like low implied volatility might suggest that they're underpriced. Would that be a fair generalization?
Yeah, absolutely. Yep. Right on.
Awesome. And obviously the opposite would be true as well. If they're overextended in the last time period, 12 months, they would be probably better ripe for being selling a combination or being a net seller of options. How would that compare to evaluating the historical volatility that you mentioned? Again, you just touched on that, so I'm just wondering where the historical volatility comes in, because that's different from the implied, which, as the name suggests, it's the implication that something may happen. And traders are either overvaluing the options or undervaluing options. I like to think about it, sorry, I'm a rambling detour again, sorry. I like to think about that as the run up to Christmas, because, round about now, because we're doing this at the beginning of December, those top 10 toys at Christmas have just been released. So the implied volatility on that has gone through the roof. And this black market appears on eBay for all these toys. You can buy them at 3, 4, 5 times the regular retail price. So options have that similar thing on the run up to certain events, don't they? But again, just come back to the question, how would that compare to, or how would you integrate the historical volatility assessment so that you can determine, whether it's under or overvalued? And do you have to be fair, you've mentioned some software. Do you have some software or tools to assist you with this?
Yeah, I mean, I do have some tools to assist me with certain things, and I guess some of them, I guess I didn't really think about it in terms of historical volatility, but it kind of does relate. Well, actually, to kind of go to your analogy about the top 10 list of toys or whatever, if you're the kind of person who sells those on eBay and you make that your business, like, you want to have an inventory of these ready to go, I would imagine. I mean, I don't know, I don't do this kind of thing, but
it was a whimsical example.
Yeah, but if you load up on these things beforehand and they don't make the top 10 list, holy cow, you're going to be stuck with them. So like,
it's the fidget spinner of the toilet metaphor that we're using.
Yeah.
You've got 1,000 gross of fidget spinners that you can't give away.
Yeah, so you kind of have the historical volatility before that, just like, when this event happens, it's either going to make me or break me.
So by comparing the implied with the historical elements, you can see, am I getting overexcited about this, for example, or is it within the historical norms of the ebbs and flows? Because if your expectation that this is going to go to the moon, or whatever the equivalent is, but historically it's not done that around these events, then that your emotions are perhaps taken over. And you can kind of rein yourself in, I would imagine, and keep yourself on the straight and narrow with those tools and assessments. To be fair, that might lend to another question. What are your thoughts on the psychology, the emotional side of training, the unsung hero of the long-term trader? Really, it's something that's wrapped up very quickly in a throwaway phrase, but seldom ever talked about to any great length. So, what are your thoughts on the psychology and the importance of that when it comes to the long-term success of a trader?
Oh man, yeah. I mean, as traders, we tend to really focus on like the numbers, the flashes on our screens, the technology, and all that. But the trading psychology is probably the most important. No, not probably. It's silly. Is the most important thing when it comes to trading. Like, I always like to say, it's not man versus market. It's really man versus himself. That's the trope when it comes to being a trader.
Yeah, and as we've just illustrated there, it's summed up very quickly. But to go deep on that subject, it's a very personal journey. And only I think this is probably one of the more difficult elements of the career choice that we have, is only what you need to work on. No one, because anyone can learn a system, a strategy, a process, but the reality is some people have got a natural ability to be mindful of themselves. And usually what I say, I'm sure you'll agree, is the people that have had some area of success elsewhere in their lives, whether it be sports, whether it be business, they can bring that mindset to the trading world, and often they're very quickly adapting to the market environment, where all they need is perhaps a more structured and logical process, something that you may provide, because they've already got a mindset that allows them to deploy that with greater efficiency. Whereas perhaps a newer trader and I don't mean this disrespectfully to anyone, because we've all got to start somewhere, but the person who's not had the greater success in elsewhere in their lives. Again, for me personally, that was where I felt I was not academically good. I was not a good sports person. I was an average grade student. So, I had to kind of struggle with the mindset, and I knew that this was something that I needed to work on personally. But what do you see when you come across traders? Do you notice that as well, where the person who's got that je ne sais quoi from elsewhere in their life compared to the person who's going from a standing start? How do they struggle, or how do they flourish?
Yeah, man. I'll tell you, we've got all the good questions today. Jeez Louise. We all approach everything in life from context of things that have happened in the past in our life. And man, I'll tell you, like, there's a lot of stereotypes of like what career paths make for being a good trader. And like, one is engineers and pilots are both said to make for pretty good traders, because engineers, they're logical, they like to get into the inner workings, figure out how it works, and it's math based. We're not putting emotion in there or anything. Pilots apparently just follow a checklist when they get in a plane. And there's some career paths, doctors and lawyers, who some people will say have a harder time being a trader because they're always known to be correct. The doctor says you do this, and hey, I'm a doctor, like, people listen to me.
That desire to be right is what you mentioned earlier as well. It's not about being right. I can't remember exactly how you phrased it, but it's not about being right. It's just about making money. And I suppose, to use the business metaphor, you don't need to make money every day to make money every month or every quarter, every year. And I suppose and certainly I've seen it, the more academically inclined professional, where there's a certain skill element involved and their job depends on being right every opportunity, there's that mental adjustment before it clicks into place, because they've still got the mindset. It's just they need to think about that mindset perhaps in a different way. And some people, it's quite challenging. And again, I know I found it difficult because I had to learn this quite literally the hard way. I did the make it up as you go along method. I managed to have fortunate market conditions that allowed me to make mistakes early on, and make mistakes in the morning and correct them in the afternoon.
Yeah, but I mean, if you were able to do it for 12 years and it worked, like you overcame those things, and like one of the things that, like, and I don't even know what your trading style or system was, but for you to have been able to do it for 12 years successfully, you overcame the psychology of it. Like, you stopped saying, well, I've got this trade on, I've got a profit, what should I do now? and got to the point where it's like, if it does this, I do this. If it does that, I do that.
It's almost an algorithm, and if this, then that. Again, for me personally, I like that thinking process. And don't get me wrong, I mean, we all like to kind of shake our intellectual stick at the markets from time to time, and put some forecasting. And all we're doing is scratching the ego. I mean, I know that, you know that, we all know that. But the reality is, when it gets down to the brass tacks on the hard right edge of the chart, and insert your own whimsical metaphor next, it's all about just doing the same thing you did yesterday and the day before and the day before that and the day before that. And on average, it'll work out. I think when you come to that realization that it's no different to any other business in the world, that a successful business that has a proven process, that follows it to the letter, and from time to time make some course corrections depending on market conditions, bull markets, bear markets, even just neutral flat markets, having those winds of change just dictates how you make those adjustments. Having that minor flexibility to to make those adjustments, that's what makes that long-term success. And I would imagine that that's why you've been as successful as you have, and quite literally teach other traders to be as successful as they are. As I mentioned earlier, again, I want to be really respectful of your time. I want to thank you again so much for putting some time out just to talk to me, and for our lovely listeners. Is there anything that you want to add or leave us with? Is there anywhere that you'd like to, anyone listening to get in touch? Again, obviously, we'll have all those details in the show notes as well. So if you click the link and read more below, you'll have access to them. But is there anywhere that you'd like our listeners to go to so that they can get the most and contact you and really get the most out of their own trading if they feel that you're the right person to help be a shining light on their journey?
Sure. And speaking of journey, I wanted to do something special for your listeners, and I did. And so here's what I did. I didn't create. We've got this really smart guy that works with us on technology named Bobby, and trading being a journey, an adventure, your story. Bobby created this, I guess you'd call it like a choose your own adventure video, if you ever read those books when you were young.
Yeah, it was the Jack, I can't remember, the Jackson, the Dungeons and Dragon ones. Yeah, I do remember this. Sorry, I'm having a little flashback to myself. So choose your own adventure.
Yeah.
Choose your own trading adventure. Yeah, I love those.
Yeah. And so when you, if you're listening to this podcast, you might be in your car or out on a run or whatever, but when you get home, log into your computer before you check your email and go to MarketTaker.com/vest. Hopefully you can remember that one, vest. So it's market, like stock market, taker, like take what is rightfully yours, 2 T's in a row, MarketTaker.com/vest. And
that's VEST, just for those with hard of hearing and funny accents like me. VEST as in anti-Vesta from the podcast, so vest. Again, the link will be in the show notes. I'll also, if you are on an email list, I'll email it out to you as well. So don't worry if you can't write it down straight away. The link is in the show notes.
Awesome, man. Thank you so much. This was really, really great.
It's been an absolute pleasure. I could talk to you for hours. I'm sure that you would be most welcome if you decided to come back again, and maybe we can have a look over your shoulder next time at some of the tools and the processes that we've touched on today, and maybe explore them in a little bit more depth.
Yeah, that sounds great, man.
Awesome. Again, thank you very much for your time, and to you, our loving and adoring listener, see you at the same time next time. Bye for now. Keep in mind that futures, options on futures, stocks and stock option trading involves a degree of risk that may not be suitable for all investors. Past performance is no guarantee of future performance. Anti-Investor provides educational information and does not provide financial advice.